Hey, good afternoon, everyone. It is 3 o'clock on Monday. Here is a quick rundown on the markets. There's no new real fundamental news to talk about. Continues to be problematic weather-wise down in Brazil. Our forecast is really okay. Way too early for us to trade weather, and really we're just now getting into the time period when a true weather market out of South America might come into fruition. So, what do the technicals look like, and how may they be impacted? We've talked about soybeans. This is new old crop soybeans. We've talked about this a lot. I think that this is a 1-2-1-2 count. I think that this could get really, really explosive. Today, you started to see a little bit of that. And look at these long lower shadows. You see lots of rejection of this $13 area. Every time we test it and probe it, we get bought. Now, in the last 2 days, what we actually have here is a second consecutive bullish engulfing shadow. So you have an inside day, and then you have a little bullish engulfing shadow, and now today you have a second one. That can really take hold, and if this 1345 high gets challenged, then I think beans could really get off to the races and move pretty quickly. Do the fundamentals support that? Yes, they absolutely do. Does that mean it has to go up? No, absolutely not. It does not. But for now, it looks to me like we should expect the test of this level up here, and then we'll see how it goes. So one day at a time. But for now, I think beans look good and are nothing to really change our opinion in that analysis. New crop beans, no different. Instead of a bullish engulfing shadow today, what we ended up with was a bullish engulfing day, where the real body of this candlestick fully engulfed yesterday. So, and we also have the long lower shadows down here. So we're going to hold our analysis here and just say we're looking for higher prices, and we'll have to see if we can get enough strength to come test this 1320 level in new crop beans. A lot of time yet, so I think neutral is where we stay there. So what does that mean for corn? Corn, what that means is, man, this looks pretty bad, right? It's a bearish engulfing day, actually, where we took out the prior lows, and we actually closed right near, did we close on it? Yep, we closed right on this low from back here, or from the December 13th, and right on top of the low from November 13th. So this looks pretty negative, and honestly, it really does. So if you're looking for a bullish case in corn, you have to look at the soybean chart, because it seems unlikely that they would go in separate directions for very long. So if somebody's nervous here, I don't have any problem with having put protection on here. But I think this trend is coming to an end, and let me show you why. We have larger sustained divergence across all of our oscillators, every one of these. So as we poke down into these new lows and challenge, we're not making new lows on these. So this looks to us like bottoming action and not something we want to chase. But as risk managers, if you're unwilling to accept the old crop risk of it moving lower, then you need to sell it, move into calls, or you need to buy puts on it. Either way is fine. It's the same exact position. The only difference is if you sell your cash and own your calls, you're stopping the cost of ownership and cost of storage, right? Which is about 9 cents a month. So, or somewhere between 6 and 8, 6 and 9 cents a month, just depending on what your cost structure is. So be careful there on looking at that decision. Call us if you want to talk to us about it. We're comfortable for right now, unless we get a little bit more action and some closing action down here. But until we get that, we're pretty comfortable looking for this just to kind of meander and not really do much of anything. So what about soybeans? Sorry, before I do that, let's go back to new crop corn. New crop, no difference. Challenge in the lower end of this level. As long as we're up above this range, we're pretty comfortable. Remember, we're in short futures, long calls, sitting in here thinking that this is a 50-50 ball. No reason to overthink that or change that opinion. So wheat, what do we do with wheat? Man, it looked really good Friday. Now today we have a bearish engulfing outside day, double close, key reversal, and took out all of this stuff. So you got to look lower, then you think, wait a minute, I've got the 61.8 retracement right here, and I've got this level right in here of all these opens and closes, really isolating these 2 days here. So that's really where your risk is at. Down to 620, that's 9 more cents. I think it's really prudent to let that work. If you can even leave risk all the way in down to 595. I know that's kind of a long way away, but you just have to look at what the structure is. You've got up in one, you've got a series of 3-wave moves down that's overlapping and corrective, and as long as that low holds, you got to think, hey, that low's a solid low and it's in place, and that's supported by an awful lot of divergence action and just some nice bullish technical action. Today, obviously, doesn't prove that out at all, but still the analysis is the same. And for new crop wheat, no change at all. If anything, it's a little bit stronger, holding some of these bigger levels up here. So I'm looking for soybeans to pull both of these markets higher, and I think wheat's got enough to go up on its own once traders decide that the timing is right here. So we'll just have to be patient with it and let it do its thing. All right, that's what I've got for you today. That's 5 minutes. If you have questions, please call us. We're happy to talk to you. We'll be back with you on Wednesday or tomorrow if the market action warrants it. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great night. We'll talk to you later. See ya.